What's up, everyone? In this video, I'm going to be discussing the difference between internal range and external range liquidity, the relationship between them, and how to trade it. So first, we're going to look at this PDF before hopping into TradingView for some examples. So first, you have to understand that internal range liquidity is just fair value gaps and swing highs and swing lows, or order blocks traded inside of this internal range. A lot of people only like to classify fair value gaps as internal range liquidity, but I personally like to classify swing highs, swing lows, and order blocks as internal range liquidity. So it's just a PD array or internal swing highs or swing lows inside of a dealing range. So external range liquidity is a form of swing high or a swing low forming that dealing range, which is that buy side liquidity, and that is our sell side liquidity. So putting those two together, what is the relationship between internal liquidity and external liquidity? So price is either going to be reaching for old highs or old lows, or rebalancing to that internal liquidity or internal PD arrays or internal highs or lows of that dealing range. So understanding this, how do we use it? So after price reaches for external range liquidity, you could predict price to reach back into that range for internal range liquidity to reach lower or higher. So it's just a repetition of internal range liquidity to external range liquidity back to internal range, and it's just a constant repeat of that. So as you can see right here, this was our external range liquidity right here. Price reached for that external range liquidity right here, taking it out, and then right here we reached back for internal range liquidity, and then off the internal range liquidity, you can expect price to reach back to external, and as you can see, price comes back to external range liquidity. So let's hop into the charts and go over some examples. Here we are on the NASDAQ 4-hour chart for our first example. As you can see, you can already see what we've been discussing about. This right here is our external range liquidity, and just clear that out. And this right here is that internal range liquidity. And as you can see right here, price reached for that external range liquidity as a form of sell side liquidity, retraced back to internal into this 4-hour inverse fair value gap, which is our internal range liquidity. And as you can see, we reached lower, coming for that external range liquidity right here. So as you can see, after we reached past this external range liquidity right here, we kept expanding, forming this internal range right here. This will be that now our this would now be our dealing range. So this now right here is our external range liquidity, and this right here is our external range sell side liquidity. So we can mark this out as external liquidity in the form of buy side liquidity. We can mark this one out as external range liquidity in the form of sell side liquidity. And as price put on that swing high and that swing low, you can see price reached back into this dealing range right here, into this 4-hour imbalance, where we reached lower, coming for that external range sell side liquidity. And off of that, we put in this external range level liquidity and this right here. And as you can see, we're on a clear downtrend, so you can expect price to rebalance back to internal range liquidity in the form of this 4-hour fair value gap right here, and then reaching lower for this level of external range liquidity in the form of sell side liquidity. So you do want to pair this with a higher time frame draw on liquidity. So if you expect price to reach lower, as this is our draw on liquidity in the form of our external range sell side liquidity, you want to see price continue reaching lower, going from external to internal, all the way down to that draw on liquidity. One thing you have to remember is that time is fractal. So even though we have external and internal range liquidity forming on the higher time frames, we're also going to be having it on the lower time frames, because everything is mirrored from the higher to the lower time frames. So looking at Friday's price action on the 1-minute chart, you can see that we have formed this range, which is this would be our external sell side liquidity, and this would be our external buy side liquidity. Looking up, you can see, since we want to see lower prices to that draw on liquidity, we want to play some more bearish price. We want to play off those bearish PD arrays. So right here, we reached above that external buy side liquidity, and we know that when price reaches for external buy side liquidity, you can expect price to reach back to internal. And right here, we reach back into internal liquidity, inversing this 1-minute fair value gap. So you can expect price to come and reach for this external level, this internal level of external sell side liquidity, because we want to see lower prices. So after that, price reached back into that 1 minute inverse, coming lower, taking out the external sell side liquidity. And after we come for external, you can expect the price to retrace back to internal. And right here, we retraced back to internal liquidity, coming into these inverse fair value gaps where we came off of, coming for that external sell side liquidity right here, and our draw on liquidity. And after we reach for that external liquidity, you can see price returned back to internal. So it's very important to note that you want to pair external and internal liquidity with your draw on liquidity. These by itself will not work on its own. You have to use everything in unison together. So some key takeaways from this video is price goes from internal liquidity to external liquidity and repeat. And you need that draw on liquidity, so you want to be using this to target your draw on liquidity. And as well as from this with the higher time frame perspective, now you want on the lower time frame, you want that time and entry. But thank you guys for watching. If you have any questions, leave in the comments below, and I'll see you guys later.